Christopher Hewett, who is a consultant at TRI Hospitality Consulting, having a look at what's been happening with Dubai's hotel numbers. Christopher, thanks for joining us.
You're welcome. Thanks for having me.
Looks like January was a pretty good month for hotels in Dubai. Do you want to talk us through those numbers?
Yeah, well, Dubai had a good month in January, and that was due to a lot of demand coming into the city for, first of all, the Dubai Shopping Festival, which was the 18th festival that's happened in Dubai, and it's resulted in the hotel occupancy levels increasing 4.2% up to 89.6%. So, for the whole month of January, for the hotels to achieve 90% occupancy throughout the month is a great indicator. And on top of that, they even increased the rates by 5% to $359, which is up there with the highest in the region.
Well, the Dubai numbers made sense to me. What I was confused by actually was your Abu Dhabi numbers, where we saw occupancy rising, but room rate and F&B falling. What does that tell us?
Well, the occupancy is increasing, especially in Abu Dhabi for that month, because of the large series of events that had happened in there. You had the Abu Dhabi Sustainability Week that was in there, and it drawed over 30,000 delegates into Abu Dhabi for that. But once that demand came in, hotels were still very competitive when it came to trying to get that demand. And as we've seen over the last 24 months, the average rates have dropped substantially, and it was no exception in January.
Well, I understand the dropping room rate with competition. We've spoken quite a bit on this show about sort of the access hotels, the stock coming online in Abu Dhabi. The F&B fall, though, what does that tell us? Does it tell us that hotels in Abu Dhabi are slashing their prices in F&B and their outlets, or does it tell us that people are staying but eating elsewhere?
I think it's also a fact to do with, as each hotel enters the market, they contribute between 3 and 5 new outlets to the market. So it's also a case of, very strong competition within Abu Dhabi itself. If you look at the upscale or luxury hotels, they have over 5 outlets coming through, and a couple of those would be specialty outlets. So they're all trying to attract demand and get people into the restaurants. And I think it's just a case of, like the hotels, there's a bit of oversupply there.
I'm astonished by the rise in the prices. We had 10% growth in revenue per available room here in Dubai. During the DSF, the average room rate was $321 a night. If I'm understanding it correctly, that means that across all of the hotel characters, even the lowest category, the average cost of a room was $321, or nearly $1,200.
Yes,
1,200 dirhams, rather.
Yeah, well, our survey looks at full-service 4- and 5-star hotels across Dubai. So it doesn't represent the budget or mid.
So 3 stars are not included in there.
Not necessarily, and the ones that are, the lower categories aren't included. So it does represent the mid to the up end side of the market. But you're right, it is a very strong rate that the hotels have been able to achieve. But again, this is hotels yielding more effectively on the back of very strong demand. So the hotels know that they've got a lot of demand coming through. The business on books will be strong throughout the month, and they can see that they can yield more effectively and increase rates to try and maximise the revenues on the back of that.
Because I had somebody in town last week, and they were saying that they paid £358 a night for one night in a 4-star hotel in a not very good location. Just astonishing rates. I mean, how high do you have to go before there's a backlash?
Well, I think it's just a case of supply and demand. A number of people that I've been speaking to have been finding it difficult to find rooms in Dubai throughout January. To take this as a litmus test, I go past and see the Ibis Hotel on Sheikh Zayed Road. For the month of January, the rates were sitting at $540. That was $540.
This is the red electronic printout on the side of the hotel.
Yeah, 540
used
dirhams.
To be 250, 350.
That's right. So sitting at 540 dirhams for a night, that indicates that there is sufficient demand in the market for them to charge those rates.
How much of an indicator, though, can we take these January numbers at for how 2013 is likely to shake up to be? I mean, you mentioned the events there that go on during the month. In the capital, we've obviously got the shopping festival here in Dubai during January. The weather's good. We've got holidays. Can we take it as a positive indicator, or is January kind of a standalone month?
Well, historically, January is a very strong month because you do have a combination of demand generators kicking in. You have obviously Christmas, New Year, you have Russian New Year and Russian Christmas that happens at the start, and then you have shopping festival and a few other events, Arab Health, etc. So historically it is a very strong month. So to see January this year improve on 2012 is a good sign, and we have noticed that hotels have performed very well so far in the last sort of trailing 15 months. Hotels have been proving throughout last year. All months except for one showed an increase in all performance levels, and I think it's testament to the strength of Dubai at the moment when it comes to the economic engine that's happening. Looking at the passenger numbers were up 14% in Dubai in January, up to 5.5 million passengers, and with the projection of potentially reaching 70 million this year, it shows that there's just a lot of people coming through the region and deciding to use Dubai as a stopover point, especially for leisure tourism.
How are Cairo and the Egyptian resorts getting on? Because they've been, over the last 20 years or so, very much a yo-yo market. They have bad years and then they have great years.
Well, they're continuing in that yo-yo rate at the moment. They're still trying to rebound from the challenges that they had with the civil unrest within Egypt. And if you look at Sharm el-Sheikh in particular, Sharm el-Sheikh is driven by large groups and travel agency bookings. Okay, and generally a lot of their rates are linked to annual contracts that they book out rooms to. So looking at 2013 so far, they're still bound by the contracts that they had in 2012. Although demand has increased, and they haven't been able to yield effectively increase the rates. But we think as the new renewal period comes along in the middle of the year, that these rates will be able to increase, and the profitability of the hotels there will be able to increase as well.
One thing, a couple of things actually that jumped out at me. One was that Saudi, the market there, was a little bit hit by the fact that the DSF was on, people coming to Dubai rather than staying in Saudi hotels. The other thing was the surprising rise of 65% in profits in Kuwait as well, and room rates and occupancy all up there. It's not traditionally a sort of tourist hotspot, Kuwait. Well, what's been going on up there?
Well, it is for Saudi nationals up in the northeastern region of the country.
What is up in the northeastern? I mean, Western Europe. I mean, there isn't very much up there.
Yeah, well, but you still have Kuwait as being an attractive spot because there's quite a strong retail market. Shopping and leisure is one of the largest motivational factors for Saudi nationals within either domestically or internationally. And having the large Avenue shopping mall in Kuwait and having a lot of those big retail areas is attractive for Saudi nationals. So up from that northeastern part of the kingdom, they can just travel into the country and enjoy the time there. And because leisure rates are generally higher than the corporate rates, that's why we're seeing a higher increase in profitability.
Well, thanks for joining us this morning and sharing your insights with us, Christopher Hewett from TRI Hospitality Consulting.
Thank you.